Welcome to Breaking Banks. Welcome back to Breaking Banks. I am your host of the number one global fintech podcast and radio show. I'm Brett King, and joining me in the host hot seat today is our good pal from Breaking Banks Europe, Ajit Tripathi. He's in the co-host seat today. You can catch Ajit and the rest of the Breaking Banks Europe team weekly on provoke.fm or your podcast listening platform of choice. Ajit, welcome back to the mainstay.
Thank you, Brett. This is a very, very special show, and I've been really looking forward to it.
Why is it special, Ajit?
Well, we are hosting one of the best-known innovators and entrepreneurs in the whole crypto space, Do Kwon, founder of Terraform Labs.
Great. Well, we're going to introduce Do right now. So Do Kwon is also our guest today. He's coming to us live from Seoul, South Korea. He's the co-founder and CEO of Terra. It's both a platform and a family of price-stable cryptocurrencies aimed at mass adoption. Prior to Terra, Do founded Anyfi, a wireless mesh networking startup. I'd love to get into discussing mesh networking today as well, if he doesn't mind. And also, Do was profiled on the Forbes 30 Under 30 for his work in founding Terra. We'll get into a bit more detail on that, but Terra has raised $32 million to date from some of the biggest names in crypto, such as Binance, Arrington, XRP, Polychain Capital, and already has established partnerships throughout South Korea, and I'm guessing that's expanding as well. Do, welcome to Breaking Banks.
Yeah, thanks so much for having me. Glad to be here.
So first of all, just a sort of a check. How is Seoul coping with the whole COVID thing these days? Obviously South Korea got a lot of attention early in the piece, but you guys sort of got on top of that very quickly, and we haven't heard much since. So what's life like now during the more advanced stages of the pandemic as we've been going through it globally?
I would say it's fairly stable. I would say the main difference is most of the bars and clubs are shut down. So everything past 10, there's no place selling drinks or food. But, like on a day-to-day, if you go to parks or hotels, like they're fairly packed. So I think everybody's happy with the situation now.
Very cool. Did you study abroad, or what's your background personally?
Yeah, so I spent a decent amount of my formative years in Canada, due to the family business, and then I went to high school in Seoul and college in the U.S. at Stanford.
Great, Stanford, very nice. What's the family business? Can you talk about
my
that?
dad was in pharmaceutical shipping and medical equipment. So,
med tech, health tech now?
Oh, he's retired now.
He's retired.
Yeah.
Very cool.
Yeah.
Yeah, I know it's one of those areas that is getting very, very interesting, the whole med tech and so forth. Your background, though, I was very interested in your, not just your crypto experience, obviously, but your mesh networking experience. Tell us a little bit about that.
So I actually spent about 2 years in the Korean military as part of the Signal Corps in the DMZ. So what that means is that in Korea, on the North Korea to South Korea border, there's about 4 kilometers of border that is supposed to be demilitarized, but is actually one of the highest militarized zones in the world. So I was part of the infantry units that did nighttime patrol throughout the mountains and fields that make up the DMZ. And what's kind of interesting is that because the demilitarized zone is always ready for, let's say, power failures or telecom failures and things like that, in order for the units to communicate with each other, they use a set of really heavy military radios, about 30 kilos in weights. And then so if you put that on as well as full body armor, 2 grenades, 5 clips of bullets, and then a military rifle as well as a helmet, you're actually getting like a decent amount of workout if you're working throughout the night, like 10, 12 hours. But anyways, so what was kind of interesting is that I've always been used to this paradigm whereby like I'm always searching for like a Wi-Fi router,
right,
or let's say trying to make sure that I have LTE connectivity. But what's kind of interesting is how, like all of these different signal units were communicating with each other over radio in a fully decentralized mesh network. So I started to think about like, could there be interesting applications of this in the real world? So I forgot about that for a while. And then like first job out of college, I was at Microsoft, and they weren't really giving me super interesting work. So I started to play around with this prototype whereby mobile phones and laptops could connect to each other via Wi-Fi, direct, and Bluetooth. So wrote some really interesting routing algorithms there. And then when the prototype started to do, I think, reach a certain level of functionality, I decided that it could be interesting to do a startup with it, and then left with some of my friends to create Anyfi.
So for those that aren't familiar with mesh networking allows us to extend the sort of the internet type protocol across devices that don't have access to a core internet access node, such as a Wi-Fi router or a cell tower. What you do is you extend that network by allowing individual devices in the network to connect to each other and extend the broad network. So if you could, for example, if you could reach someone's phone, if you were close enough to someone else's phone and they were connected to the internet, you could draw down on that. What it allows us to do is build broad internet access capability across an area where you don't have, access points built out. So for you can also build apps that synchronize, with the web and stuff like that when they come back into main internet radio reception areas or access to cell towers and so forth. So could be very important technology for digital inclusion globally, particularly in more remote areas where there's less sort of stable internet access. So what's happening with Anyfi these days before we get into Terra, Do?
Yeah, so we sort of transitioned it to a B2B business. So it turns out that like digital and network inclusion is a really valuable mission, but for a small startup, it's easier to make revenue if you target large venues. So we turned it into like a turnkey B2B SDK solution targeting large amusement parks, retail locations like shopping malls and things like that. So like our first client was Everland, which is one of the largest amusement parks in Asia, seeing about 8 to 10 million visitors annually. And then, so we built up like a decent client list before I left to focus on full-time on Terra in 2017. Oh, so my co-founder is running it. Yeah.
Sorry, your co-founder?
My co-founder is running it. Yeah.
Okay, awesome. Great. All right, so let's dive into Terra. Tell us a bit of backstory. You've come from the Stanford background, and so forth. What drove you towards crypto going from Anyfi?
Yeah, so you could imagine that a similar set of search queries for mesh networks would also turn up hits like Ethereum and Bitcoin and things like that. So like if you enter like distributed network or things like that, actually a fair number of hits happen to be crypto related entries. So I would say that's sort of how I started to get information about crypto. And then after that, I got randomly invited to this Facebook chat group of about, I would say 8 friends from college. And then they were all talking about, things like Bitcoin, Monero, Ethereum. I would say this was in like late 2016 or so. And then, so that discussion turned out to be really interesting. So I started to invest more and more of my time, studying up on these different protocols and networks and just going to community meetups and things like that. And Yeah, so that's how I got my start in crypto, and then that group grew to a large Discord server, about 250 people, like working on different projects, launching startups, and that's sort of how I began my crypto journey.
But though a lot of people, that we talked to in crypto, started their journey with Bitcoin. So it seems you probably took a step further and you started with, how we can build applications with blockchain. What's the journey there?
Sure. So I remember thinking when I first heard about crypto, it's like the most interesting component is allowing things to happen with money that you can't do using regulated fiat networks. And the reason for that is because, compliance has this really weird characteristic where it's only additive, it's never reductive. So with, like forms of money like this, you generally have sort of rush to the exits, if you will, in terms of being more overregulated and less convenient with the passage of time. So in some sense, like fintech over the last 10 years has taken major steps back as well as taking some steps forward. So, but if you looked at like the early networks, a few years ago, Bitcoin is a great alternative to gold, but it's actually not a great alternative to money, right? If you look at Ethereum, it's a really interesting computing platform, but it relies on the ingenuity of other people to be able to build extensions to money. Like Ether in and of itself doesn't allow you to do more with your financial stack.
There's a fairly strong argument to be made if you're looking at this from the outside and you might make the argument, well, wasn't that what Bitcoin was supposed to be, sort of this decentralized global digital currency? But the reality is, Bitcoin really had a design flaw in it, which was that 21 million limited supply, which created inflationary effects and speculation that led to now Bitcoin not acting as a cryptocurrency in the classic sense where you use it as a replacement for fiat, but that it was essentially, that's why people hodl it, the speculative nature that it's going to be worth more in the future. So if you want to create something in the crypto space that's a true cryptocurrency, at its core, it's got to be about frictionless value exchange. It's easy for people to spend. And so how do you fix that from a design perspective, though?
Yeah, so I think you're absolutely right. Like the way that Bitcoin is being used, it's a very valuable antithesis to like the quantitative easing that's happening in most central banking currencies today. But if you look at like the core components of money, like cash, it has very simple features, right? So if you look at money, it's a fairly simple technical product that should be easy to spend and two, attractive to hold. And I would say that most of the things that we focused on at Terra over the last 3 to 4 years is to be able to do just those things, to create a money that is easy to spend and attractive to hold.
From the perspective of that sort of, how do you get, so what is the currency on top of the Terra network? What's that called?
Yeah, so we have a number of currencies actually. So we have Terra USD, which fixes its price to the US dollar. Okay. Terra KRW to the Korean won. So we have about 20 different fiat pairs on the Terra network. Yeah. And
a question on that, right? So you built a full fintech stack on top of the algorithmic stablecoin mechanism. For years, I think a lot of experts continued to challenge the viability of blockchain technology as a basis for any, large-scale consumer-facing fintech application. Now you built a whole stack and you have a lot of users. How many? I don't know how many, but how did you solve the problems of, scalability, security, and user experience on blockchain technology for the average consumer?
Yeah, so that's pretty broad, but I would say Terra is one of the, shall we say, one of the very early large-scale experiments in using a proof-of-stake blockchain to be able to secure value, tokenized value in lots of different forms. Right, so we are already, powering payment networks in Korea and Mongolia to the tune of, let's say, 2.5 million users. We have, a synthetic assets protocol whereby stablecoins can be used as a gateway to invest into lots of different asset classes like U.S. equities, commodities, ETFs. We have more than $500 million of value on something that launched a couple weeks ago whereby users are keeping lots of savings value in something called Anchor Protocol. So in terms of, let's say, security and scalability, like the average block time of the Terra blockchain is about 6 seconds, which and then TPS that's possible at current iteration of the network is about 1,000 transactions per second. This is possible because, unlike Bitcoin or Ethereum that uses a proof of work consensus mechanism, which means that the nodes that are running on the network have to solve hard mathematical problems to be able to validate blocks. We use something called proof of stake, whereby the nodes that are holding the Luna token merely have to vote to agree to get a transaction passed instead of solving that hard mathematical problem. So it's far more scalable, and it's a lot more environmentally friendly than what you would find in some of the older networks in existence.
So one of the things I saw on your CNBC thing you did with Crypto Trader is you talked about the fact that, particularly on the Ethereum network, the DApp, model, the application model on top of Ethereum, it was never. You say it was never focused on user adoption, but for a true cryptocurrency that you're going to use to buy stuff with, obviously that's got to be a core aim, is get as many people using it as quickly as possible, so that you've got those value exchange mechanisms. So talk about the limitations and how you guys are dealing with this at Terra in terms of that sort of transaction per second throughput. Because if we look at, say, the likes of Alipay, these days, where during the midst of, Singles Day, you're talking about 500,000 transactions per second. One of the key limitations that we're realizing with blockchain is getting up to those sort of values of transaction throughput become a lot harder with blockchain than traditional networks potentially, and where you see this going with blockchain and Terra itself, though.
Yeah. So I would say, like, a lot of the existing problems of crypto apps that are live today is that they're focused inwards rather than focusing outwards. So what that means is there's just so much money to be made by building like a very limited use case to people that are already trading, earning, and creating assets on Ethereum. So even if you have a service that can help the lives of 100 people that are each rolling, let's say, $5, $10, $50 million, that already brings a lot of value to your protocol. So like a lot of the DeFi apps on Ethereum today are intended to serve a already crypto native audience. So at Terra, we sort of said, okay, creating the next pickle coin, or let's say the French fry coin, is interesting. But how can we get to a state whereby users can keep their money in a savings account and earn something that justifies their cost of capital? Right. So how can we get to a state whereby when a user lends money to other people, he gets more than 0.01% and is getting screwed over by inflation every year? How can we get
so that the core concept being that under the time value of money principle, that if you hold US currency over time, the interest rate is lower than the inflationary risk, potentially, and so you're actually, the value of what you're holding is shrinking, right?
Right, absolutely. And that's a huge problem, obviously, because eroding the value of household savings is something that really disadvantages the middle class and lower income families, Because if you look at people that are high net worth, they're already sufficiently hedged against inflation by making lots of different investments. Whereas, like an average household, most of the money is going to be locked up in, let's say, a house and some household savings. So it's a very important problem to solve, and very few people in crypto are trying to solve it today.
So there's been a lot of focus, particularly during the ICO phase and now with NFTs and so forth, on token pricing. But, how was the fundamentals different in terms of the tokens you guys are deploying on Terra, particularly say UST? You say it's, a stable coin. How do you stop it from being speculative?
Yeah. So the system has a set of finely calibrated incentives to sort of will the price of Terra USD close to $1. And it relies on a set of price making or arbitrage mechanisms in order to do this. So at any given time, a user can trade in $1 worth of Luna against the system to get 1 Terra USD. And at any given time, he can also trade in 1 Terra USD to the system to get $1 worth of Luna. So the reason why this is able to keep the price of Terra USD close to $1 is because, let's say, if Terra USD is trading at 90 cents, users have incentives to buy up Terra USD from the open market to swap it against the system for $1 worth of Luna to capture 10% arbitrage. And vice versa, he has the opposite incentive to buy $1 worth of Luna to trade it for 1 Terra USD if the stablecoin is trading at $1.1. Once again, offering a 10% arbitrage.
So how does Luna differ from UST? Is Luna the transacting currency, whereas the UST is the currency you store value in?
No, so you can sort of think about Luna as, if you think about Terra USD and Terra KRW and all the stablecoins as the cash equivalents in the Terra ecosystem, you can think about Luna as the equity token in this entire system. So Luna benefits from growing adoption of Terra in a couple of different ways. So number one, as Terra USD gets more transacted and its market cap grows, the supply of Luna must shrink. Because in order to mint 1 Terra USD, you need to burn $1 worth of Luna, which means that quantity theory of money, supply shrinks, unit price must increase. Number two, when Terra stablecoins switch hands, it pays a small transaction fee, similar to many different blockchain networks, and then that fee accrues to Luna or the people that have staked Luna on the blockchain. So as Terra transaction volume grows across our family of payments, investment products, savings products, all the transaction fees accrue to people that stake Luna in the form of, let's say, cash flow. So as transaction volume grows, so does the cash flows to Luna.
So do a slightly different question on this, right? So all of these users and transactions, I'm sure, generate a lot of data. So how do you handle all of that data, given that blockchains don't necessarily scale very well for a lot of data?
Yeah, so we have a couple of different initiatives that are going on. So for example, we have an in-house project called Mantle, which is just set of incentivized nodes to quickly index all the blockchain data and then to service it up to, you'd say, analytical dashboards or, like reporting tools so that they can be consumed very quickly. So it's like a GraphQL interface that eats up and indexes lots of data. We're also working with the team to sort of historically store a lot of the important data on the Terra blockchain on Arweave, so that data can be served up quickly. So there's a number of dashboards like Flipside Crypto and some other dashboards that are coming out that's offering a lot of insight.
Awesome. Yeah, we've got a break in a moment for commercial, but I would love to talk about, as we come back from break, we just saw on March 30th, Dan Schulman, PayPal CEO, talking about why digital currencies will make the economy more inclusive, and definitely would like to get into that. But also talking about the CBDC trials in China and what we can learn from that. At Libra, we can get into that as well. So, hey, listen, guys, we're going to take a quick break. You're listening to Breaking Banks. We're talking to Do Kwon on Terra, USTs, cryptocurrency, stable coins, and all of that goodness. We will be right back after this short break. Stay with us.
Most of you probably think that we're in the middle of a bear market, but I don't really understand how that can be true. Because if you were to apply traditional user number evaluation metrics to things like EOS and Tron, EOS, for instance, the unit value of an EOS user would be above $10 million. And given that Justin Tron is the only person that's using Tron, the unit value of a Tron user is $900 million, which seems pretty high to me. So insofar that you have blockchains that are not delivering any value, they shouldn't be valued anything at all, right? What I say is that the days of token prices that are not backed up by user fundamentals are over and gone. Going forward, we should stop asking projects how many followers that they have in their Telegram rooms. We should stop asking them when they plan to do airdrops. We should stop asking them how many Twitter followers that their founders may have. We should be asking them the one thing that matters, is how they plan to deliver the promise of their technology to millions and millions of users. So we're not there yet, but I think we're making some strong strides to make that happen.
Welcome to Breaking Banks. Today we are talking to, you just heard a crypto trader on CNBC talking to Do Kwon, and he really told us that South Korea runs on Terra, which is quite remarkable for a blockchain-based fintech ecosystem. But that creates a lot of interesting questions for us. So, Do, as you and Terra expand and grow in US and Europe, what sort of challenges do you see? Because consumer preferences and regulation are somewhat different. So how has that journey been for you so far?
Yeah, so I would say our different suite of products are more appealing in different regions. So for example, our payment solutions are doing really well in Asia, where the average settlement time is longer, and the tolerance for getting working capital back quickly, so settlement times, the desire for that is stronger in Asia than lots of places in the West. So payments are doing really well in Asia. We're seeing lots of countries where the ability to invest in foreign equities is limited either by adversarial regulation or by limited access to brokerages, be really enthused by our synthetics asset protocol Mirror. So for example, our top market for Mirror protocol is Thailand, taking up about 35% of total volume and usership. Next market being China, third market Indonesia, which is remarkable given we've done no localization or marketing or done anything of the sort in each of those markets. And
cool. I'll have to put you in touch with the Thai tech startup ecosystem as well through Paul Ark and Nietzsche and the guys here, the Tech Source people. They're a pretty interesting group in Thailand. We should take that offline. What about Ajit? You had a question on digital identity.
So I'm glad you brought up Indonesia. So one of my fondest memories of Indonesia is that a lot of people don't have a last name. So, and a lot of people just go on first names, which means it's not quite clear often, and it's not necessary that everyone has documentation, passports, proof of address, and things like that, which is kind of what the legacy financial system is built on. So how do you solve for digital identity in a payments network like that?
Sure. So I think that's a really interesting question. So for the payment solutions that we have rolled out, users have the option of doing one of two things. They can top up into the wallet by using Terra stablecoins directly, or they can use, let's say, banking integrations, right? So these banking integrations are quite similar to Plaid, and then in order to be able to use them, you need to be giving authentication from your bank account. So from that angle, like if you want to use the fiat banking rails, you do have some of that fiat banking identity baked in. And furthermore, as this hooks up to e-commerce merchants or offline merchants, those guys do a decent amount of information collection from users. So collecting those things together, I think we're pretty much relying on conventional identity for now. But digital identity sometime in the future can have really interesting applications.
So does Terra have its own wallet ecosystem, or are you guys co-opting other wallets?
We do have a wallet ecosystem. So there's, for example, Zengo out of Israel, also quite heavily used in the US, Math Wallet out of China. So we're fairly well integrated at this point with lots of different wallets.
Yeah. And where does Chai fit in?
Yeah. So Chai is an e-wallet that we founded about 2 years ago. So the idea was that we would use this wallet to drive the ability for Terra stablecoins to be used for payments in lots of places in East Asia and Southeast Asia. So it's sort of like, let's say, the Nexus phone of the Terra ecosystem, if you will. So it showcases the ability of what can happen when Terra stablecoins are put to work in powering a payment system. So today, Chai has about 2.5 million users in Korea at the moment, and is processing about $1.6 billion annually. It's servicing about 45 of the largest e-commerce merchants like Ticket Monster, Yanorja, food delivery in guys like Hello Nature and Market Curly, the largest convenience stores chain, CU. So it's getting to a state where we're closing the retail loop on the things that users can buy using the Terra Payments network.
Let me read for you from a piece that Dan Schulman, the CEO of PayPal, did in Fortune magazine, just back on March 30th. This is what he said about digital currencies improving financial inclusion. And then, Do, I'd like your comments on it. He said, mainstream adoption of digital currencies would expand accessibility, particularly for those who are underrepresented and have lower incomes. The need for this access was evident in the rollout of pandemic stimulus payments in the United States, which were late in reaching and in some cases failed to reach millions of unbanked Americans, many of whom were people of color and those with lesser means. Those individuals that could access these much needed funds were sadly disproportionately burdened with check cashing and processing fees and charges. Digital wallets and currencies can help fill this critical gap and ensure that people can get direct access to the money they need instantaneously. Great quote, and sort of talks to particularly the CDBC rollout in China that we've seen, now going out to, I think it's 6 cities now across China, but, Shenzhen and so forth there, where the Chinese government injected, they created different wallets, but they are now co-opting Alipay and Tencent WeChat Pay, etc. And they inject the cryptocurrency directly into the community by giving some of your CDBC directly in your wallet, and now you can go out and buy stuff. And so it's very clearly built towards this, once it's in your wallet, you're going to spend it, right? There's a clear value exchange. But looking forward for things like universal basic income and the problems that Dan Schulman's talking about and things like that, there's some pretty interesting, operational differences we can create with digital currencies instead of sort of real world, fiat in respect to that. So getting back to Terra, though, what are the mechanisms that you've created where you can see, potentially a big acceleration in adoption of Terra, or the stable coins underneath it?
Yeah, so that's a really good question. So I would say, different digital currencies, intended to be built for this type of value transfer has different objectives. So if you look at the Chinese CBDC, it's really a construct whereby this new form of money is intended to make more efficient the value transfer between the state and its citizens, which means that, for example, if China wanted to do like a giant hongbao scheme to implement some form of UBI against a certain segment of its population, then it becomes as simple as selecting a set of wallet addresses and dropping a bunch of currencies there. And it's immediately usable through things like WeChat and Alipay. That's not to say that it's going to make the relationship or value transfer mechanisms between people and people and people and merchants more efficiently. That's because like the way that CBDCs are going to be designed is it's going to follow like all the same legacy regulations and restrictions that come with existing currency. So it's built on a different infrastructure, right? But the things that you are not able to do using a traditional fiat rails, you still wouldn't be able to do. And in some sense, it raises some important questions of what can happen to users' privacy or who has real control of these assets once it's controlled in like a centralized, government-run ledger and things like that. So for Terra, it's payment apps are designed to make the relationship or value transfer mechanisms between the merchants and the consumer more efficient. So two benefits of using Terra payments. Number one, we settle in every block, so about 6 seconds or 6.5 seconds on the Terra blockchain versus, let's say, the 7 days that it takes to settle in Korea, 10 days that it takes to settle in Japan, and then so on and so forth. So this is important because for a lot of small businesses or freelancers, they need money right away in order to be able to buy things or pay for things. So for example, like a cab driver in Singapore needs the fares from his day of rides right away so that he can buy fuel for next day of rides and put food on his family's table. Or like if you're like a small restaurant in Japan, for instance, like you need that money quickly to be able to buy ingredients for next days of operations. So the ability to cut down drastically on settlement times is one of these things that digital currencies can do instrumentally well. And it's to the best of my knowledge, it's Terra's the first sort of payment network to implement this at scale. Second benefit is
this is specifically the one block settlement capability, or
yeah. So one block settlement capability, as well as like we've built up an infrastructure of being able to settle to merchants and getting regulatory clearance.
Because merchant settlement is obviously key, as you say, for them being able to utilize the currency.
Right. And
what was the second piece you were going to talk about?
It's lower transaction fees. So average cost of settlements is about 2.73%. But most of the costs don't actually accrue on the B2C layer. So consumers actually don't see any of the direct costs associated with making a payment, but all the costs actually accrue on the settlement layer when the payment service actually settles to the merchant. And it's actually like a very high margin and interesting type of business, whereby with the passage of time, like the costs from running these payments goes down, but you still get to maintain and keep the same margin. But by settling directly to merchants on the blockchain itself, we're able to drastically cut down on fees such that, from like 2.7 to 3%, the commercial rates that we charge is anywhere between 1.2 to 1.5%, which is significantly lower than what any of the competition is charging in Korea today. So merchants obviously really love that.
So Joe, in a world where, let's say central banks are starting to issue or at least start to think about issuing their own digital currencies, as in the case of Thailand recently, do you think they're going to be threatened by payment systems like Terra?
Yeah, so I would say different central banks are going to be sensitive to different things. So for example, in Korea, like a big concern is whether, I think in Korea, they're less worried about things like money laundering. I think less of that happens here. But one of the things that the BOK is really sensitive to is maintaining capital controls. So if you have an effective currency that is usable everywhere and can be transmitted freely across borders, that's something that really makes it difficult to maintain capital control regimes. So I would say there is definitely a portion of that challenge. But in terms of retail payments, I think they're less concerned about that because, like the only thing that it does is that it makes the lives of ordinary consumers and merchants easier on a day-to-day basis.
That makes sense.
Very cool.
Right. So as as Terra expands to US and Europe and gains a lot of adoption in the West, what sort of experience have you had with regulators or sort of other differences that you have seen, and how do you plan to address those challenges going forward?
Yeah, is it like do you have to go through the whole education process of teaching the regulator about your tech before it's co-opted, or are you guys just getting out there and doing it and dealing with regulators as the opportunities arise?
Yeah, so a couple of things. So for one thing, I think the use case that's going to make more sense in more developed markets like Europe or the US is a savings protocol Anchor. So to give a short summary of how Anchor works is that it's basically a very simple system whereby a user can deposit funds into like an app or any other service and earn a 20% interest on the USD denominated savings. So it's basically a decentralized savings account. So the reason why we think this is going to make more sense is that payments infrastructures in the US and Europe are fairly mature. So there's a lot of inefficiencies, but at the same time, a lot of good enough narratives that are going around. Whereas in terms of interest rates, like 20% is super killer. So like it's actually, if we even got like one of the fintech companies to integrate with Anchor protocol, such that they're offering a 20% yield on unused user deposits, then in that case, it's commercial suicide for all the others to not try to adopt the same thing. Because, for example, if Venmo was offering 20% interest rate, like in 6 months, Square Cash App is going to go out of business until they are able to offer competitive rates. So our goal here is to use the savings protocol as a Trojan horse to get this into as many wallets and fintech apps and different things like that as possible, and then use that as a segue to adopt some of our payment solutions and some of the other things as we grow in those markets.
How does the protocol deliver rates that are so much higher than, let's say, in the fiat system today? I mean, I work in DeFi, so you could turn that question around, but would love to hear your view on it.
Right. So what most people don't know about blockchains is that you actually, there's this thing called staking. And what that means is that the blockchain is giving you, let's say, 10, 12% interest on holding assets like Luna on the blockchain. So these deposits are Luna denominated, and let's say the yields are Luna denominated. And then same for, let's say, Ethereum when it goes to 2.0. And a lot of different proof of stake networks like Polkadot, like Cosmos Atom, collective market cap of which is in tens of billions of dollars and hundreds of billions of dollars in including Ethereum. Mm-hmm. So what that means is that there's tens of billions of dollars of value that's being created and printed each year. And another way to think about this is that it's an uncorrelated monetary policy to the federal funds rate. And that's what's interesting, in the sense that each of these blockchains have fixed monetary policies that have nothing to do with the federal funds rate. So basically how the system works is that when a user makes a stablecoin deposit, a portion of these deposits are used to acquire staking positions across multiple different POS networks. So a portion of these deposits would go to, creating like a staking position on Cosmos Atom or Ethereum or Algorand. And then the interests that are accruing to each of these positions gets conferred to the depositor in the form of a stable yield after being liquidated for stablecoin. So basically, it's tapping into the fixed monetary policies of blockchain networks to be able to power a high yield for stablecoin depositors.
That's really, really cool. That's pretty awesome.
Very cool. Yeah. You want to get into Mars Coin, Ajit?
Yeah. So
here I'll give you a thought problem. And I'd be really interested in this. Ajit and I've had this little project that we've been going back and forth on. Elon obviously is getting into the whole crypto space, talks about Dogecoin, and he's obviously a big fan of Bitcoin right now. You can buy a Tesla with it, but one of the more interesting challenges is what sort of currency would we have on Mars? Potentially. And so I'll put it in sort of this way is, one of the big differences about the Martian economy from the Terran economy, using Terra's etymology. But one of the big differences will be that the whole Martian economy, in at least in the initial period of colonization of Mars, let's say for the first 100 years, is going to be geared towards self-sustainability, so that Mars can be independent from Earth.
So one of the reasons I really like the Mars coin idea is, right, because it makes us ask the question, which is, if we were to redesign the financial system from scratch without any of this legacy, right, and all the mistakes we might have made in history and all the technical debt,
what would money look like in the future?
Yeah,
exactly.
Yeah.
So, how do you think, in a best case scenario, how would you redesign money to be better for the world?
I think a couple of things. So I think one of the problems with money is that it rewards consumption over savings. So, and if you look at economic theory, there's good arguments as to why that's something that's positive for the world. But I think a system whereby you have a consumption-driven economy whereby the values are inculcated in favor of recklessness instead of frugality is not great. So I think we should try to get to a system whereby any unit of accounts needs to be pegged to something that is other than the current CPI. So I think the value should be pegged to things that people actually spend the vast majority of their wealth on, like, for example, like a real estate index, or let's say, like software index, or like in some sense, like recursively tied to the NASDAQ. So like assets that are, I would say, more relevant today than it was in, let's say, 1970s. And second, I think we need to get to a state where the sources of yield are more variegated. So, people need to be earning more by lending it out or keeping it in private depository institutions instead of, freely giving it out at like something that is even less than inflation. I would say third, there should be fewer restrictions on how we can spend our money. So a lot of the excuses for introducing things like capital controls and know your customer rules is that, oh, this money might be used to fund terrorists. But in fact, like really, it's to accomplish, the state's economic incentives. Like, for example, keeping money in domestic borders instead of letting them move abroad. So I would say that you should have that blockchain technology allows ways in which terrorist organizations and organizations that shouldn't be getting the money are more highly censored. But at the same time, money can flow freely for all these different types of use cases, and thereby, like, you're really owning the assets that you're holding in your bank account.
Absolutely. Sounds very cool. So tell us about the effect that the pandemic had on Terra and the work that you've been doing. Did you see an uptick? Have you used that for more development time? What really happened during COVID for you guys in terms of growth and expansion?
Yeah, so one of the things that COVID definitely slowed down is we were not able to have the same set of licensing discussions in order to expand into more countries. So I would say expanding outside of Korea slowed down significantly. So in terms of international expansion, it was a big minus. In terms of domestic growth, it's been overall very healthy. So for example, we had, when in the beginning, when COVID hit, we had a lot of companies that were working in the hospitality category, like Yanorja or some others. So the volumes there decreased significantly. But general purpose e-commerce and grocery delivery and food delivery, those categories all exploded. So all led to a pretty positive, volume and usership uptick throughout 2020 and throughout this year. So I would say generally the pandemic's been pretty bad for everything else, but for Terra payment volumes, it's been rather good.
Oh, congrats! And what are your plans over the next 12 months in terms of continuing that?
Yeah, so I would say in terms of payments, like the big focus until the pandemic closes would be to grow volumes and to offer lots of different value propositions to users in Korea. So it'd be things like revenue-based financing for merchants to make using Terra payments a lot more sticky than it is today. I would say a second step is to really grow the AUM of Anchor by offering this SDK to be integrated into lots of different fintech apps and neobanks, such that people can start to see this higher yield across a large family of different clients and consumer-facing apps. So
yeah, that'd be great. I mean, I think crypto custody built into challenger banks is just something that's going to have to happen. And I think also the fact that, wallets of the future, AI-based smart wallets are obviously going to treat cryptos just like they do fiat, and it won't really matter where the source of funds are coming from and things like that. So I think there's the whole challenger bank alignment with cryptos, or smart wallets generally aligned with cryptocurrencies, especially stuff like what you're building on Terra is great. So, Do, look, this has been a great conversation. For any of you that want to sort of check this out, we will tweet out the CNBC presentation that Do did on Crypto Trader on CNBC. Also, of course, check out terra.money. Do, how can people find out more about yourself? Where do they go to contact you or reach out to Terra?
Yeah, so I'm pretty active on Twitter, so D080K1. Please feel free to send me a DM. Also, my Telegrams are always open. It's at Do Kwon. So we'd love to chat if you're looking to build something interesting on Terra and to reinvent the future of finance.
Awesome. Ajit, thanks for helping us set this up with Do.
Thank you so much. It's been a privilege. Thank you so much, Do.
And yeah, fantastic story, Do, and we wish you all the best. And of course, we'd love to have you back on the show and give us a progress update at some point.
Sounds great.
That's it for Breaking Banks this week, guys. You've been listening to our conversation on Terra. Terra.money. Again, check it out. And don't forget, we're now coming up on our 8th year for Breaking Banks. So there's a big back catalog. Be sure to go back and check out some of our classic crypto interviews with people like Charlie Shrem and Brock Pierce and others in the space, to find out about some of the historical developments of cryptocurrencies and blockchain that we've been observing through the lifetime of Breaking Banks. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.